Hey folks, welcome to a product review at Finominal. Today we're going to look at Alpha Architect's US Quantitative Momentum ETF that trades under the ticker QMOM. Now, the ETF has a track record of almost 10 years, and the fund selects 50 equal weighted stocks trading in the US, primarily on momentum and some quality filters. So let's have a look in terms of what the right benchmark for QMOM is. And we're going to use our Alpha Analyzer tool for that. Now, what we do see is that the suggested benchmark is the MSCI USA Momentum Index, which is perhaps not so surprising given that this is a momentum product. We do see the R squared of QMOM to that index is fairly high. Tracking error is low, at least lower than to the S&P 500, and the correlation is also higher. Now, from performance perspective, we can see that the product has slightly underperformed over the last 10 years compared to its index. And I think we can primarily contribute that to the equal weighting. Now, there are years and decades where equal weighting works, but at least the last few years, that was not the case. And that is amplified if you look at Magnificent Seven at the moment, and kind of the concentration where a few large caps dominate, that in such years equal weighting is less effective, although the long-term track record clearly speaks for it. Now let's see if that fund does what it's supposed to do in terms of primary factor exposures. But the first thing we're going to do is switch to the right benchmark. Now we're going to run a returns-based factor exposure analysis. And we're going to look at the effective betas over time. And what we would expect is consistent exposure to the momentum factor, which we see, as well as to the size factor. So it's kind of interesting that most of the stocks are smaller from a market cap perspective than those in the USA Momentum Index. And again, that's probably a function of being one concentrated with 50 stocks, but also in terms of the equal weighting. We also do see that the exposure to kind of like value and low volatility and also quality was kind of like divergent over time. Not so surprising, for example, that the average exposure to low vol was negative, because usually the stocks that are outperforming do not tend to be the ones that feature low volatility. But we are kind of getting what we're expecting. Now, from an alpha attribution perspective, we do see that the fund has a relatively high active share, 84%. We do see that the outperformance versus that index was on the lower side. Same thing as the alpha consistency. Having said that, if you do look at the cumulative alpha contribution over time, it was negative, but it's also something that is not as meaningful as with other non-factor focused funds. If you buy a factor focused fund, typically you can explain most of the returns, and alpha are the unexplained returns. So we do see that most of the returns are simply explained by the market, and we can also see the exposure of the factors. So in this case, for example, the exposure to momentum has been positive versus the exposure to small caps, or the size factor, has detracted from performance. And again, this is kind of like the equal weight showing up, i.e. portfolio construction. Now, that's in terms of QMOM on a standalone basis, but let's have a look at how it compares to its peers. Now, we selected 4 other momentum-focused funds from iShares, Spider, JP Morgan, and again, a Spider product, but one now focused on S&P 500 or 1,500. So let's have a look in terms of how QMOM has done from a performance perspective versus its peers. Now, we selected products that have more than 5 years of history, but we do see that QMOM has kind of performed in line with its peers, but we also do see that it seems to be the most volatile. You can see here's a spike, and it seems to be having a higher volatility, and we can confirm that by looking at the volatility. Yes, indeed, QMOM has the highest volatility compared to those peers. Now, the interesting aspect about that part is if you look at QMOM and its correlation to the stock market in the US, it's on the lower side. It's only 0.75 versus those other four products are much more highly correlated. And we can contribute that again to the equal weighting, which does effectively imply that QMOM offers higher diversification benefits compared if you didn't add the other funds. And that is also reflected in the style exposures. So if you look at those 5 funds, and we have a variety of fundamental metrics, they're kind of divergent on some, for example, growth and valuation. But the interesting aspect about QMOM is that the equal weighted and the concentrated portfolio provides you the kind of like highest momentum exposure, which is what you want if you buy that fund. And it's not only high momentum exposure you're also getting high momentum combined with high quality in terms of low leverage and high profitability. And so this kind of summarizes our product review of QMOM, that it's certainly not the fund, the momentum focused fund that has generated the highest performance over the last 5 years. But if you do want momentum exposure in a long only structure, or smart beta, you can also call it like that, and then this is probably one of the best products, simply because that it's very concentrated with 50 stocks, and the equal weighting, it increases the factor exposures. And so it's a very precise tool, and that's kind of like one of the nice aspects about it. That's it. Hope that helps. Have a nice day.